Supply chains is the unsexy AI bet that just pulled $95 million from Founders Fund and JP Morgan. Most AI coverage obsesses over chatbots and frontier models, but the smartest money in the room just moves somewhere far less glamorous and far more defensible. A startup called Loop takes supply chain data that nobody can actually read, PDFs, with no structure, paper documents, unformatted messages, and turns it into intelligence that tells you where you're losing money before the damage lands. Not after the shipment disappears, not after the supplier goes dark, but before. Now, here's the VC term you need to understand why this round matters. It's a Series C. In VC, that means the company has already proven revenue, already proven product market fit, and investors are now writing larger checks to scale what's working. A $95 million Series C in 2026 isn't a thesis bet. It's a conviction bet on a business that's already winning. And the conviction here runs deep. Valor Equity Partners, one of XAI's biggest backers, did serious diligence on how defensible Loop actually is before writing this check. They still wrote it. Here's why. Loop is embedding directly into customers' ERP systems, their transportation management software, their warehouse networks. That's not a feature. That's infrastructure. And infrastructure has switching costs that no frontier model can replicate overnight. The shift happening in AI right now isn't about who has the best model. It's about who owns the data layer inside high-stakes industries: healthcare, finance, legal, logistics. And Loop just staked its claim on global trade. The companies that dominate the next decade are the ones embedding AI so deep into operations that switching becomes impossible. What industry still doesn't have its answer yet? Follow Fund AI Mentals, because that gap is where the real money is moving.